In today's video, we're going to be going over 3 stocks that I'm going to be holding forever for the long term. I'm typically a long-term investor, and we're going to be doing this through M1 Finance. So before we jump into this video, don't forget to smash the like button. And if you guys want to see my entire portfolio, links are going to be in the description. I share my M1 Finance portfolio with everybody to see, and you guys can track my progress and just check out some of the stocks that I own and I'm going to be holding for the long term. So let's jump right into it. So right here, we have my Bruce Wang portfolio for 2021. We're sitting at $44,345. And this is my all-time returns here, $7,000 gains. Just ignore this. This is 57% returns, but that is basically, that is the money-weighted return. What we're going to be looking at is, I'm just going to give you a quick overview of my entire portfolio first, and then we can dive deep into the stocks that I'll be holding forever. So a lot of the companies that is in this portfolio right now, I'm planning to hold for at least the long term. So in this portfolio, I have 27 holdings, and currently I am up $8,200 in unrealized gains. So now let's go over the 3 stocks that I'll be holding forever, and you guys can also do your research on this as well. So the first stock that I'm planning to hold on forever is going to be Walgreens. And the thing about Walgreens is it is a dividend stock. It is a long-term play, and even in the short term, I'm really bullish on this company. Walgreens right now has a 3.78 dividend yield, and on top of that, their market cap is $41.88 billion. So one thing that I look for when it comes to many companies is I don't look for anything under $1 billion. Penny stocks and all that, I've tried to day trade. I've tried to swing trade those companies, and I've had a really bad time doing it. I've lost a lot of money, and I've learned that if you guys really want to make some money in the markets, you have to do long-term investing. A lot of the companies here that I've owned throughout crashes, I've bought the dips, I've just bought back in and reinvested into solid blue chip companies. And that's where I've seen the most success with my investments. So here are some of the bullish cases that I'm seeing with Walgreens and some of the changes that I'm seeing them make throughout the pandemic so far. First off, you can get vaccinated at Walgreens. You can get checkups at Walgreens. You can do a lot of minor medical stuff at Walgreens. So this is bringing in, especially from the vaccine, this is bringing in a lot of brand new customers. And one thing that you guys might not know is I've been buying some stuff off of DoorDash through Walgreens. So if you guys don't know what DoorDash is, it's basically a gig economy type of job where basically you can order food, order stuff from convenience stores, and you can order stuff from Walgreens now through DoorDash. So because a lot of times I just don't want to go out and, risk getting sick and all that. So I just order stuff from DoorDash, and DoorDash right now, you can just buy stuff with Walgreens on there. You can buy milk, eggs, all of that. So if we take a look at Walgreens' performance, they've been doing pretty good, kind of flat over the last month. Over the last 3 months, they're up almost 30%. Over the last 6 months, they're up 25%. So it's been kind of moving sideways, right, all year long. So I really think this is like a sleeping beast when it comes to a company that people can really get behind. And even earlier today, I invested a lot more money into Walgreens. Let me see if I can show that to you guys here. So earlier today, I bought $100 worth of Walgreens, and with M1 Finance, you guys can buy fractional shares. So that means I bought 2.15 shares of Walgreens at $48.40. All right, so let's jump into Walgreens, WBAS analyst here. So they're saying it's worth roughly $48.32. So this is on the negative side, but like I said, I have my bullish cases on this, and Walgreens is sitting at $49 right now. The upside is down negative 1.7 with medium uncertainty, but we're gonna scroll down here. Let's take a look at the revenues. All right, you're not going to see revenues here like CCIV. They don't have any revenue, right? Yeah, all these brand new SPAC companies coming out, they have no revenue. But when it comes to Walgreens, we're seeing $136 billion almost every single year. Dividend yield of 3.9%. PE ratio of negative 61. So when it comes to the PE ratio, we can see that it's negative 61. So this does not look good. But remember, if we take a look at the net profits here, we can see that a net profit was a loss of $697 million. And like I said, with Walgreens being proactive and having the benefit of having the vaccines, being with DoorDash, having all these new gig economies, like they're keeping up with the times. And if we look here, it's projected that their earnings will be in the positive for the next quarter. All right, so this is going to be this is my bullish case for Walgreens. All right, so the second stock that I'll be buying and holding forever is going to be Intel. Okay, so in this article, we can see that there is a big global chip shortage. And Intel is one of the companies that is going to be profiting from this chip shortage because they make all of their own microchips. All right, so there's companies like Ford that have to stall the productions of a lot of their cars. You know, this is not just Ford, there's many other companies as well, car making companies, that they have to pause and just not make any more cars because they need these microchips to, you know, put in their head-up display and like just the display in general. During the pandemic, there's just so much demand for electronics, PS5, the new Xbox. I don't even know what the new Xbox is called. PC sales exploded in 2021. And with that, there's becoming a big shortage with a lot of chip makers. And even AMD, which lost market share to Intel in the fourth quarter because its chips were hard to find. Intel largely manufactures its own chips while AMD relies on third-party foundries. And it's going to take a lot longer for a company like Intel to just explode because it's not like GME, where GME just, you know, shoots up, super volatile, it's up 20%, down 20%. This company is a $250 billion market cap company. Companies like this, they don't move like that. It's boring, it's slow, and that is what I actually like. I like companies that pay dividends, you hold them for a long time, they're going to be reliable, and they're going to be paying you out and growing over time. That's why I always stick to long-term investing. It's because I don't really have to worry about it too much. I can just slowly dollar cost average, slowly invest my money and invest in companies that are bullish, right, in the short term and in the long term, and just have that money work for me and grow. So let's take a look at Intel for our long-term play. Intel, they're saying, is roughly worth around $79.73, 26.2% upside with a low uncertainty. This is what I like to look at. I like to find companies that are undervalued. Intel right now is $63.19. And if we scroll down here, again, we look at the revenues here, $70 billion every single year, very consistent. Dividend yield, 2.3%. You're not going to find values like this, especially in the tech sector. In the tech sector, many of the PE ratios of these other companies, they're sky high right now. You know, they're forward looking and, you know, they're predicting 10, 20, 30 years down the line. But if we look at these sleepy, not sexy companies that all they do is just generate money consistently every single year and pay dividends, like it's almost a no-brainer to me. So let's zoom out just for a little bit here. This is my technology pie, which is worth roughly almost $8,000, and I'm up 1,200 on it. And in this pie here, we can see we just talked about Intel. I also have IBM, Cisco, Microsoft, and Apple. These companies here, Microsoft and Apple, these are the ones that's always in the news, always on mainstream media, and are talked about nonstop. But companies like Intel and IBM, they really don't get as much spotlight on them. So the third stock that I'll be buying and holding forever is going to be International Business Machine Corporation, also known as IBM. And right now I own 1,500 shares here. And if we take a look at the gains, I'm not up that much on this company. And it's, again, one of those companies that's going to be a slow grower, all right? Market cap is sitting at $100 billion. And right now, the price is sitting at $123.21. All right, so let's jump into some of the price targets that I use. This is Finbox. I'll have a link in the description if you guys want to check this one out yourself. And I'm going to move myself down here. So if we take a look above here in the Finbox fair value, these are a average of a bunch of analysts put together. It's going to be at 162.01 cents. The upside is 31%. Uncertainty is a medium. And for my bullish case with IBM, they are expanding rapidly into the Indian market. So our CEO, not our CEO, but the CEO of IBM is Arvind Krishna. So he is of Indian descent. And if you guys don't know anything about India, they're one of the most rapidly growing countries in the world right now. This is an untapped market where if IBM can be one of the bigger players as a tech company there, there's going to be such massive growth for IBM. And right now, IBM is such a slow growing stock. It's so sleepy right now. It hasn't been really doing anything other than generating massive revenues every single year. Like it's not fancy. It's not, it's not sexy. That is why that's the companies that I love to look at first. If you only pay attention to the companies like Apple and Microsoft, you're going to miss out on companies like IBM here. We can see their revenues are $70 billion every single year, guys. Come on, like what company makes this much money every single year and is consistent and is growing? And if we look here at the other data metrics here, dividend yield sitting at 5.4%. You can just put your money in here, have it grow 5% every single year. PE ratio sitting at 20. We got companies like Tesla with over a 2,000 PE ratio. We have a bunch of other companies way overextended. So if you really want a value play, IBM is where it's at right now. So those are my 3 top picks for my long-term investing. And remember, guys, I've tried it and it's a lot easier doing long-term investing than, short-term and day trading. It's day trading is sexy, but you got to be the top 1% to be able to make money that way. So if you guys want to check out my portfolio, links are going to be in the description for my M1 Finance. Go check out these videos. If you guys want more content from me, don't forget to like, subscribe, hit that notification. I'll see you guys in the next video. Thanks for stopping by.